And with that, I am happy to introduce Corinne Pullman, our Senior Vice President, National Affairs and Partnerships at CFIB. Thank you, Corinne.
Thank you, Alexa, and hello, everyone. Welcome to this special webinar today with CRA on the Canada Emergency Wage Subsidy. Just yesterday, we did a couple of webinars just generally on CFIB issues and all types of different programs, and the emergency wage subsidy was definitely high up there in terms of number of questions. So we're very pleased that CRA has agreed to join us today to try and tackle some of those questions, as well as provide you a bit of an overview on how things work, including a bit of a walkthrough of the online calculator. So not wanting to take up too much time and spend too much time on that, I'm just going to jump to the next slide. And I wanted to just let you know our commitment at CFIB to you is to let you know that we will continue to update our website with any new information on COVID-19. So you can continue to go to cfib.ca/COVID-19 for any information on what's happening. We have updated our own FAQs, but we will continue to update our own FAQs as we listen to the questions and answers that come out of this type of webinar. I suspect CRA will do the same if there's any things that aren't yet covered on their FAQs. It is a very comprehensive FAQs as well. You'll see that there is a link on the slide that you have on the screen, which you can also get as a handout on the side to both CRA's FAQs as well as their website. Of course, if you still don't have the answers that you need, you can call CRA's dedicated helpline, which we have there, but you can also call CFIB at 188-234-2232 or ask on our website. And we, of course, will also do everything we can to help you find the answers. Now, we may not get to every question today, but we will certainly, as I said, incorporate those questions into our FAQs going forward. And certainly if there's something that seems to be very specific or very difficult, we will try and endeavor to get back to you as well if we don't get to it today. Okay, so moving on to the next slide, I want to start introducing our first guest. Our first guest is Matthew Gray, who's the policy advisor from the Office of the Minister of National Revenue. So I'm going to turn it over to Matthew for a few words.
Thank you, Corinne, for that introduction. So on behalf of the Minister of National Revenue, the Honourable Diane Leboutillier, I'd like to thank you for participating in today's call on the Canada Emergency Wage Subsidy. This program is a key component of the Government of Canada's Economic Response Plan. As of last week, the CEWS has paid $26.6 billion in subsidies to employers, ensuring that they could keep as many as 3.2 million workers on the payroll. The enhanced CEWS program was redesigned to be more flexible and support a wider range of employers. Together, we're succeeding in flattening the curve of the pandemic, but we do know that the road to economic recovery remains long and uncertain. We know that small and medium-sized businesses have faced particular challenges and that you've had to find new ways of operating, gradually opening up while protecting the health and safety of your employees and customers. This program only works in partnership with you. That's why this consultation with stakeholders has been an essential part of its design and implementation. Led by the Department of Finance and with the help of colleagues from across government, we have done our best to improve the CEWS to make sure that it continues to provide the support that you need to get through this difficult time. We could not have done this without your engagement, patience, and trust. I'd like to thank you again for your participation in this call, and a big thank you to the CFIB, which has been a vital conduit in getting the word out and helping us understand your needs. CFIB's weekly survey and consultations like this one have helped to give us a clear picture of what's happening on the ground. I'll be staying on the line to hear your questions and comments, and with that, I will pass it back to the host or to officials at the CRA for the rest of the presentation. Thanks very much.
Great. Thank you, Matthew. And I did want to just sort of elaborate a little bit more on what Matthew said about the work that we've been doing with CRA. And I just wanted to also thank CRA for their collaboration over the course of the last several weeks. Just for everybody on the webinar should know, we have been working with CRA to make sure that we can get as much clarity around what's happening with the wage subsidy, and they've been very open to the feedback we've been providing, so we want to thank them for that. And again, so we're pleased that the collaboration continues to work well. So we're going to move on now to a little bit of information from some of our key subject matter experts from CRA. So if you go to the next slide, I think we're going to start with Randy Hewlett. As you can see, Randy is the Director General of Legislative Policy Directorate at the Legislative Policy Regulatory Affairs Branch. So Randy, I'm going to turn it over to you.
Good afternoon, everyone. As you're aware, the CEWS has been substantially modified, including being extended until November the 21st, 2020. The CRA has launched an enhanced CEWS online calculator to help employers prepare to apply for the next phase of the CEWS program, which will open for applications for period 5 on August the 17th, 2020. We have also updated much of the content on our website, including technical frequently asked questions. Employers can expect to receive their payment within 3 to 5 business days if they are registered with direct deposit. With the enhanced CEWS, more businesses will become eligible for the subsidy and will have additional flexibility. We encourage employers to take a look at the revised CEWS and consider if they are now eligible, even if they determined they were not initially eligible. The CEWS update and enhancements also include a top-up subsidy of up to an additional 25% for the most severely affected businesses to help them resume their business operations faster. Thank you. I'll now pass it to my colleague, Karen Butcher.
Thanks, Randy. While the application process for the Canada Emergency Wage Subsidy remains the same, through My Business Account, Represent a Client, or the web form application, the new calculator will make the process simpler for you. If you haven't already done so, please sign up for My Business Account or Represent a Client, as well as direct deposit, and check out the calculator. You can find the calculator, which is now available in both online and spreadsheet options, on the CRA's Canada Emergency Wage Subsidy webpage, alongside detailed information on how it works, who can apply, how the claim periods are structured, etc. The calculator guides employers through a step-by-step process that will show the maximum support they qualify for based on the information provided before they apply. I would like to remind everyone that you must submit a separate application for each claim period for which you are eligible. The application portal also allows applicants to amend an application if the original entry contains a typo, incorrect information, or needs to be changed for whatever reason. If you need support, the CRA has a dedicated phone line so employers can speak directly to an agent about eligibility requirements, how to calculate the subsidy, or how to apply. Thank you, and I'll now pass it over to my colleague, Harry Gill.
Thank you, Karen. My name is Harry Gill. I'm the Director General of the Small and Medium Enterprises Directorate within the Compliance Programs branch. The CRA's approach to CEWS compliance starts with providing early certainty to help businesses get it right from the start. So we've done this through outreach and engagement sessions like this one here with businesses and stakeholder groups, and through the FAQs and the calculator and the tools on the website that my colleagues have talked about. We have been active in doing compliance work, so there's been fairly robust prepayment compliance work that's been done on so far in periods 1 through 4. As claims are received, our risk assessment tools and analytics help us detect errors or intentional non-compliance at the prepayment stage. And then we do select some of those claims for further review as well, for more manual review. We're focused on doing these reviews as quickly as practical, and most prepayment CEWS reviews have been resolved in a fairly short period of time. And we do encourage you to keep your books and records in good condition and be ready to provide those to CRA. If we ask, it'll make things go a lot faster and get the claim paid out quicker. So we'll continue to monitor claims as we go forward to detect deliberate non-compliance. And in those situations where we feel there is deliberate non-compliance, audits will be conducted. And, of course, there's the legislative tools that are available in terms of penalty application and whatnot in the most egregious cases. We will start undertaking post-payment audits soon. So up until now, it's mostly been only prepayment. So before the check goes out, we've been doing some checks. Going forward now, we are going to start later this month doing post-payment audits, which means you might have already received a claim, but we could come out and audit it sort of like we'd audit a tax return after the fact. All that to say that the overall approach of CRA will really be to work with employers to correct errors and ensure the maximum benefits to which employers are entitled are paid. So more upfront education and facilitation of compliance like we're doing today as opposed to after the fact. So with that, I'll pass the floor back to Corinne with CFIB.
Great, thank you, Harry, Karen, and Randy. So that's a little bit of an introduction to what we're going to be talking about today. Our next speaker, however, is going to actually do a bit of work for you and is going to walk you through the online calculator. So I'd like to introduce Lorraine Redikoff. Lorraine is the Director General of Ministerial Services Operations Directorate, and she will be sharing with you a screen that how the new online calculator works, and hopefully that will help answer some of the questions that I know are already coming in. Over to you, Lorraine. Lorraine, are you on mute? We're not hearing you.
Thanks, sorry about that. Yeah, just a technical issue. Hi, thank you so much. As Corinne said, we did work very closely with CFIB over the last few weeks to develop a new version of the online calculator that we've just launched earlier this week. And we really, in this second iteration, wanted to take a very strong approach towards being more usable and making it as easy as possible to sort of understand the steps that applicants will need to go through as they apply for the subsidy. So what we're seeing here is the main landing page that you get to. I just want to mention that if you scroll down to that, there's a heading that says sections, and as you scroll down, there's quite a bit of information, as Randy alluded to earlier, about the subsidy. Sorry, I've just got a ringing phone here. But there's quite a bit of information about that, and if you read through those sections, you can get all of the information about how the subsidy is structured and so on and so forth. I won't go into a demonstration of that just now, but just wanted to draw that to your attention. If you go back up to the main part of the page, you'll see a big green button that says calculate your subsidy amount, and as you click on that, that will actually take you right to the calculation page. So you can get straight to the calculator, and we give a little bit of information up front about the usefulness of the calculator. And as you go down, we also give sort of information in the section that says before you start the calculation. And this is really sort of the main pieces of information that you do need to be aware of and have in hand before you begin the calculation process. So that's all included right up front. You can go through that checklist, and we've got links to other areas of the page or FAQs or whatnot for areas where you may need more information. And then we come to an actual, the steps to using the calculator. I just note the privacy statement there. That's important to note. We don't collect or store any information that you input into the fields below. So this is just an important privacy consideration for you as you use this. And so then the first step is to select your claim period. And you see there's a drop-down menu there. Right now we have periods 1 to 4 available to apply for, and then of course period 5 opening next week. So if you select period 5, you will get a clear summary indicating that that's your selection. And then you go down to entering the information in step 2. And what's new here as you go down the page is you'll see that we have an online calculator or the spreadsheet. We've always had the spreadsheet, but the big usability improvement here is that we've now made an online version available of the calculator. So if you click on that, the drop-down appears for that. And you come to the questions and the information that you need to fill out in order to proceed with applying through period 5 and beyond. And the big difference is that you now have to calculate your revenue drop. So that's a really key part of the calculation. And you'll see there's a drop-down menu of which baseline revenue comparison will you use. You can use the previous month, 2019, and if you click on that, what you'll see is that all of those fields for period 5, the appropriate fields are automatically not populated, but they come up. So you have those months appearing automatically. But if you go back and select the other option, which is the average of January, February 2020, those fields come up. So it gives you the correct fields depending on your selection. And as the periods go forward, we of course will be adding period 6 and period 7 and so on and so forth. This of course will be adjusted to reflect the correct months depending on which period you're applying for. So I'll just go back up, and for the purpose of this demonstration, we'll go with that first selection, previous month. What I'd like to show you is just run through quickly just 3 different models of the different type of result that you will get depending on what your situation is. And so for the purpose of the demonstration, we'll keep the model really, really simple and just go with hundreds all throughout 2019. So if your revenue was $100 in each of those months. And the first model that I'll show you is the person or the employer who's going to qualify for the maximum support. So if we just put tens in all of the fields for 2020, so this would be an employer who had quite a large revenue drop. And what you see as you populate that is that you get a summary below of your revenue drop and your subsidy rate. So what your results are showing you is that you've got a 90% revenue drop, and because your revenue drop was 90%, you've got you're qualifying for a base rate of 60%, and you're also qualifying for a top-up rate of 25%, and so your overall wage subsidy rate is 85%. So you're getting a very sort of a clear indication of what your rate is based on the results, based on the revenues that you've entered. I'll show you now a model of somebody who is coming in under a safe harbor provision, so is getting a higher CEWS rate on that provision. So this is a person who's showing a revenue drop of 35% throughout all of the months in 2020. And what you're seeing there is that, again, you see automatically that the results change. So we're showing a revenue drop of 35%. And then a very clear indication that because you are over that 30% revenue drop, you're qualifying for the safe harbor provision and getting a 75% subsidy rate. So this is one of the functionalities where the calculator is automatically providing that safe harbor rate based on the revenue that you're putting in. You're not the user is not having to wonder whether they're getting a rate or not. It's just automatically factored into the calculation when they enter the number. And then finally, I'll just show you a model where the deeming provision kicks in the calculation. So here we'll enter revenues of 80 throughout, and then in that last month in July, revenue of 90. So this is an employer who's had a revenue drop that was higher in June than in July. And so what you're seeing here is that because the revenue drop was higher in June, the calculator is automatically taking that into account and providing a higher subsidy rate based on that higher revenue drop in the previous month, based on that deeming provision that's in the legislation. So you're getting a CEWS rate of 24% based on that higher revenue drop. And so once you complete that step and calculate the revenue drop, the next step then is to calculate your employee wages. And so as you continue down the page, there is an option now to just do that straight in the online version. Again, previously we had this only available in a spreadsheet, but we now have it online. And so here the first question is whether the employer is arm's length or non-arm's length. And there's, so you would select which situation applies to the employee. And there's a definition there in case, just if there's questions around that, we have the definition right there. And then again, as you continue to scroll through, you simply would populate all of the fields, the pre-crisis pay, and then the weekly pay for weeks 1 through 4. So again, for the purpose of this demonstration, we'll keep it simple and just go with $1,000 for each of the fields, $1,000 in baseline, and then for each of the weeks. And week 4, and for week 4, that employee will be on leave with pay, so we'll just check that little box off. And what you're seeing in the calculation summary for this employee is that we ended with a CEWS rate of 24%. That's been applied to the pay, so you're getting a CEWS amount of $240 for each of the employees, except for the employee in week 4 who's on leave with pay. Calculation is different for that individual, and so the calculator is automatically calculating a different rate for that individual because they're on leave with pay. So as you continue on, you have the option to add additional employees. One thing I'll say, we recommend using this online function for employers who have smaller numbers of employees, somewhere around 20 or so. And that's just because, again, we're not saving or storing any information. And so if you happen to have your computer crash or get up or walk away and you go off the page during the session, it won't be saved. And so it's really an exercise that we recommend doing all in one sitting, just so that you're not losing all of the information you put in. You then have an option, so you can add your employees. You then have this option to review, download, and print employee calculations. And what that, if you click on that, what you'll see is we've actually provided this in a spreadsheet option that you can print right away, or you can download, you can save your work in a spreadsheet file yourself to your own device when you're done. If you close that, you then have this important step, which is send data to the form below. So when you click on that, what you'll see is that automatically all of the information that you've entered above is now pre-populating the fields below, so that you're not having to manually transcribe that. And so this is now akin to the existing calculator where you have information that is automatically filling out the different line items that will be needed in the application. And as you continue to scroll down, there are a few things that you will have to enter manually, like the premiums and contributions. This remains the same, so you'll put those in, you'll enter those just as you would have in the existing calculator. So for the EI, QPIP, and so on and so forth. And again, we'll just put $10 and $10 just for purposes of the demonstration. And here you're seeing this automatically populating those line items, and then your deductions. So we'll leave that at 0 for the temporary subsidy, and we don't, and we can just put 0 in for the work sharing. And then as we scroll down, again, these are populating your line items for the application, and then you can calculate your total wage subsidy below, and that gives you your printout with your results that you can take and then enter the items into the formal application form when you go to apply for the subsidy starting on Monday and going forward. So that is very, very quick run through of how the calculator works, but that is sort of the big change that we've made in this iteration, is to have it all in this online format. The spreadsheet, of course, remains available. That is for those who prefer to use a spreadsheet or who have higher numbers of employees to enter. That remains available. The other thing I will just mention is that if you were to go up and select periods 1 through 4, the online option for the employee wages is available for those previous periods as well, and it automatically adjusts. Automatically will adjust based on the old rules. So it'll be a different, slightly different calculator because the rules were different in the previous periods, but that's also available. I'll stop there. It's a very quick demonstration, but happy to take questions if you have them.
Great. Thanks, Lorraine. That's helpful to get a bit of a run through for those of you who have not yet used the online calculator. Hope that helps. And if you have, maybe that helps clarify things a little bit. So very helpful. Thank you. So I believe that takes us into the Q&A session. So we have lots of questions coming in, and so we are going to sort of jump right into them. And so I want to start with a question here from Robin. Robin asked, if you choose a cash accounting method in the first 4 periods, can you switch to accrual accounting with the new CEWS in periods 5 to 9? So I will turn that over to anybody at CRA who can give Robin an answer on that one.
Hi, it's Randy Hewlett here. Hope you can hear me. So if you go to our frequently asked questions 12 and 12-1, you will find the answer there. So the bottom line is that an employer that chooses to determine its revenues based on the cash method or the accrual method must use the same method for all claim periods. And there's additional information in those frequently asked questions.
Perfect. So hopefully that clarifies things for you, Robin. All right, next question is coming in from Kathy. Kathy is asking, if I am paying my staff just the allowable CEWS, should vacation time or pay be accumulating on the CEWS, even if the actual work is only 10 to 50%?
So I don't think this is really a CEWS question. It's perhaps a question related to whether or not under the contract of employment you have to pay employees vacation pay, perhaps as well combined with what provincial labor legislation might say. So I don't believe that is a CEWS question.
All right. I'm wondering if my colleague Rachel has anything to add on that. I'm not sure if she heard the question or not. Just to sort of bring a little bit more flavor into that. Rachel, are you there? And if not, that's hi.
So the question was, should vacation time pay be accumulating on the CEWS, right?
Even if the actual work is only 10 to 50%. Yeah.
So yeah, so again, we would probably need a little bit more detail on that to get a good answer for sure.
Okay, fair enough. Thanks, Rachel. So we'll go on to question 3 from Deneen, which is, this is, I think, this is a very specific question, but I think it's sort of reflective of sort of what's happening in some sectors of the economy that are still fully closed. So like, she comes from an industry that's still fully closed, the trade show business, and they don't expect to reopen until well into 2021. And they have 4 key employees they do not want to lose who are laid off right now. They would like to bring them back as on leave with pay. So she has a series of questions. So we'll go through them maybe one by one. First, can they do that now and include them in the wage subsidy?
So generally, I would say yes. Employees that were previously laid off and hired back, even if paid retroactively, could qualify for the CEWS, provided all of the other requirements are met.
Okay. Second, she's asking if they made $1,500 a week before COVID, can they now bring them back but only pay $900 per week, having the wage subsidy covering the majority of their wages, giving it their best effort because they have no other revenues? That's something you can...
Sorry, go ahead.
No, I was just asking, is that something you can answer?
I think generally I would say that there's no impediment in the CEWS legislation that would limit your CEWS merely because you're paying less wages after COVID started. Obviously, the amount you're paying would get factored into the calculation, and there is differing rates, especially when you get into period 7 and beyond for employees that could be considered paid while on leave. So I would encourage you to plug the numbers into the calculator and figure it out. But you need to remember as well that presuming in this particular case, if they have zero revenue and they're probably going to benefit from the maximum amount of CEWS in periods 5 and 6 of 85%, but those rates do go down as you get into periods 7 through 9. So you may or may not cover the entire amount.
Yes, okay. And then her last, I guess, component was third, if we can do this, am I understanding the calculator correctly by entering pre-crisis wages and then what we can afford to pay each week in the 4-week period?
Yes, so baseline remuneration is an important component of calculating the amount of a wage subsidy you might receive for an eligible employee. It's particularly important for employees who are considered not to deal at arm's length with the business. Without a baseline remuneration pay for employees who do not deal at arm's length with the corporation, the CEWS could end up being nil.
Okay, very good. Great, thank you. I hope that answered most of your questions, Deneen. Danielle is asking, do we include the wage subsidies received in previous periods in our revenue calculations for those months?
So a couple of points on this question. First, I would say that it's important that people recognize that the wage subsidy that you receive for CEWS is taxable. However, when it comes to calculating revenues, excluded from revenues are extraordinary income items. And while the CEWS might be considered revenue in the normal course of business activities, it would be considered an extraordinary item because it is related to COVID and in an emergency situation, so not normal revenue. So that could be excluded from your revenue calculations for purposes of determining what your rate subsidy might be for subsequent periods.
Okay, very good. Okay, thank you. So Mark is asking, for the different options of the baseline remuneration periods, can you use different choices for different staff?
Yes. So I would encourage you to look at FAQs 18. In particular, there's an example there that goes through the calculation of baseline remuneration and the elections that are available. Maybe it's worth mentioning that for the definition, baseline remuneration is generally amounts paid between January the 1st, 2020 and ending on March the 15th, 2020, excluding periods of 7 or more consecutive days with no remuneration. Then there are elections that are available for each employee, and the employer can elect for each employee for each claim period. So for 1 to 3, periods 1 to 3, that baseline remuneration election goes from March the 1st to May the 31st of 2019. For period 4, there are a couple of options. It's March the 1st, 2019 through to May the 31st, 2019, or March 1st, 2019 through to June the 30th of 2019. And then finally, for periods 5 to 9, the election that is available is from July the 1st, 2019 through to December 31st, 2019. So lots of options. Each employee the baseline remuneration can be different for each employee, and in fact, it can differ from period to period for each employee.
Okay, great. So that's probably some good news for Mark. Kelly is asking, is the form available for the 10% income tax subsidy for those that did not deduct from the payroll remittance?
I don't have that information at hand, but my understanding is the forms were made available or will be made available very soon. I'm not sure if any of my colleagues from CRA on the line might have a more definitive response.
It's Harry. Yeah, the form is available. I think it's called the PD27. And if you go on canada.ca and search that, it should come up.
Okay. So hopefully, Kelly, you got, it's the form PD7, is that what you said?
27.
P7, thank you. Okay.
Sorry, 27. Sorry.
All right, form P27. There you go. Okay. My apologies. Did you want to repeat that one more time?
Yeah, P as in Peter, D as in David, 27.
Perfect. PD27. Thank you, Harry.
Yeah.
All right. Next question I am going to share here is from Jim. Jim is, in order to get the contribution of work share required on the application, do we just ask our employees to report to our company on the payment received? So there's lots of questions, I think, around work share. So that's one of the key ones. I wonder if you can help.
Yeah, so this is a really good question because there is a deduction from CEWS for the amount that is received on your work share program. So if you go to our frequently asked questions and you look at question 20, we do have a note to that question that on an administrative basis, the CRA will accept a reasonable estimate of work sharing benefits received by eligible employees if the eligible employer doesn't have the exact amount. So I would think that it would be reasonable if the employer asks employees for those amounts and receives information from the employees as to what it is, then that would constitute reasonable efforts in that respect.
Okay. Excellent. And I think Jim was also asking a little bit, he sort of a follow-up to that was, if using work-share program, will CEWS support the balance paid from the company?
Not quite sure I understand that question.
That's okay then. Okay, that's fine. We'll.
But it's something we can look at if you get additional information on it and you want to send it to us.
Okay, I will. We will look into that for you, Jim. All right. The next question from Ronald is, are the online calculator and spreadsheet the same in terms of maximum benefit calculation for us? So can we keep using the spreadsheet because we're used to it?
So yes, they are the same, but I would encourage the person to make sure they're using the most recent version of the spreadsheet because the rules have changed.
Okay. All right. So I will just say, just as an FYI, on yesterday's webinar, we did have a couple people mention that they were having some struggles with the spreadsheet, that they thought there were, we weren't sure if there were some bugs in them still or if they weren't doing it correctly, but I'll just put that out there. I don't need you to respond to that, but it did come up 2 or 3 times on another webinar we did yesterday where some of them who were trying to use the spreadsheet noted that there seemed to be some issues with it, but as far as you guys know, it's all up to date and it's ready to go.
It should be. I would encourage you, if you do think there are errors, because we did have people send us information where there were minor things that we needed to edit. So if you see something, let us know and we will look into it.
Great. We will do that for sure. All right. Next question is from Tom. Tom is saying that he opened a restaurant, his restaurant business in March 1st, 2020. They have he has no previous history to compare it to. What are the options, of any, does he have when it comes to CEWS?
So that's a good question. I think you'd have to look at which periods we're talking about, but certainly, you know, if you look through the FAQs, we give some really good examples of how to compare your revenue from previous periods and the elections that's available. I know there were issues with periods 1 to 4 where individuals who never started a business until early March of 2020 were on the outside and not able to get the CEWS. So maybe if I have more information as to which periods he was talking about. So off the top of my head, I can't really say for certain.
Okay. Okay. So, Tom, we may need a bit more information in order to give you a better answer. So perhaps you can still try and flag it here if we can get to it. Otherwise, maybe you want to give us a call at CFIB and we can then see what we can learn from CRA. Great. All right. Next question is from Susan. She asked, do we have to use the same baseline as we did in periods 1 to 4 in period 5 and onward?
Baseline remuneration?
I'm assuming that's what she's, yeah.
So no, as I mentioned earlier, you do have an option to choose different baseline remuneration for each employee, depending on which claim periods you are in.
Okay, and you can change it from each period to period.
Yes. Now, if you're talking about qualifying revenue for a reference period, there are changes or differences between periods 1 to 4 and 5 to 9. So if you chose the alternative approach, for example, for periods 1 to 4, nothing prevents you from periods 5 to 9 of choosing the year-over-year approach, as long as you're consistent for those periods.
Okay. Good to know. All right, so our next question here from Ryan. Ryan wants to know if he can go back and change periods 1 to 4 with these new changes. They had $0 revenue for the first 4 periods and only got 75%. Can they now go back and get 85%?
Good question. So the 85% max rate, which is the base rate and includes a top-up rate, only applies for periods 5 to 9. So the maximum wage subsidy of 75% of eligible remuneration, if you had a revenue drop of 30% or more, that continues to apply for periods 1 to 4. But there's
Okay.
nothing that prevents you from amending periods 1 to 4, you know, if there are legitimate reasons for amending it. But certainly don't amend it expecting to get an 85% rate, because that doesn't apply for those periods.
Okay. All right. So unfortunately, it doesn't sound like you can get your 85% on that one, Ryan. Next question is from Jacqueline. Online calculator, 2019 revenue and 2020. Revenue is from the first of the month to the last day of the month, correct?
Correct.
Simple and easy. Yes, but we do get a lot of questions on that, so I just wanted to make sure that we had you respond to that. All right. The next question is from Jerry. What if an employee didn't work a week or two during the baseline period?
So the baseline remuneration is the average weekly pay during the particular period, excluding 7 or more consecutive days without pay. So you would exclude those 7 or more consecutive days from the calculation.
Okay. And is that something that's obviously part of the calculations on the online calculator, or that's something they have to do in advance?
No, the online calculator doesn't calculate your baseline remuneration. We have we have some information on the website, FAQs, and I believe there's a text box that may pop up in the online calculator that explains what it is, but it's up to the employer to calculate the baseline remuneration within the confines of the legislation for each particular employee.
Okay, very good. All right. Carolyn is asking, what happens if you bring a new employee on board? Would they qualify?
Yes, so the wage subsidy does apply for new hires. A new hire may not have a baseline remuneration period, and if that new hire is a non-arm's length employee, then there would be no CEWS. But for employees who deal at arm's length, the subsidy does apply.
Okay, perfect. And can you just, I know we get this question every once in a while, can you just sort of differentiate what the difference between a non-arm's length and arm's length employee? I don't know if that's something you can do quickly, just so people understand. Most people do, but not everybody does.
Yeah, just give me 2 secs. I'm just going to open up my FAQs here and go through it.
Sure, so, that would be good.
Yeah, so we have a information bulletin or a folio that talks about what non-arm's length is in detail, and there's various provisions that could apply. So that's referenced in the FAQs. So, but in general, when it comes to employees who are not dealing at arm's length with the employer, if we're talking about a corporation, then shareholders of the corporation or family members related to a particular shareholder would be considered not to deal at arm's length with the employer.
Very good. Thank you for that clarification. Next question here from Grace. Grace is asking, with respect to non-arm's length employees, so it's probably a good thing I asked that, if they did not earn a salary prior to March 16th, 2020, but instead were paid a dividend, can they be included in the CEWS?
So no, dividend is not considered to be remuneration for the purposes of the CEWS. So if you have a non-arm's length employee who don't have a baseline remuneration, then using the calculation, it would come out to nil for that employee if they're now on the payroll.
Okay. So sorry, Grace, that's not going to help for you. JF is asking, so we chose a method of calculating revenue on non-consolidated basis. Do we continue to do the same going forward on a company by company basis?
So generally, one of the hallmarks of CEWS is consistency from period to period, but there is an option for certain of the elections to change them from period to period. And I don't have the information right in front of me, so I'm going to hedge a little bit here. So my understanding is that is one of the elections that can change from period to period. But once you change that, you must remember that all members of that consolidated group must use the same method for calculating the revenues.
Okay.
And I think if you look at starting at question FAQ 9 onwards, there's some detailed information on how to make those elections in terms of calculating revenue for consolidated groups and members of affiliated groups.
Perfect. So that is part of the FAQ. So you may want to take a quick peek at that, JF. All right. Moving on. Lots of questions still rolling in. And I'm trying to get to them as quickly as I can. So everyone just bear with me here a little bit. So David is asking, why for period 5, using the bi-weekly spreadsheet, when I entered $0 wages for the first 2 weeks, then a wage amount in the second 2-week column, did it generate $0 for those recently hired employees? I thought the 14-day rule no longer applied. Can you shed any light on that one?
Yeah, so I mean, I can confirm that the 14-day rule no longer applies to periods 5 through 9. I can't say exactly what's happening there with the calculator or if it is indeed an error.
Okay. So you're basically validating that yes, the 14-day rule should not apply in period 5, correct?
For periods 5 through 9. So in periods 1 through 4, the employee had to have worked more than 14 days with the employer in a particular claim period. That rule no longer applies.
Okay. Very good. Where am I here now? Okay, I believe the next question is coming from Kathy. Is vacation considered leave?
So I presume they're talking about this in terms of an employee considered to be on leave and how that impacts on the calculation. So generally, vacation pay is not considered to be leave for the purposes of determining whether the employee would be considered on leave and for the purposes of CEWS.
Okay. Very good.
There is an FAQ on that. I can't put my finger right on the exact number of it, but it is on our website as well.
Okay. All right. So I think the message here is check out the FAQ. You've been covering a lot of these questions in the FAQ. I know it can be daunting because it is pretty long, but we do have the link in the handout. Just a reminder to everybody to if you want to go and take a look at that as well. Then the link to the FAQ at CRA's website is there as well.
Yeah, there's a lot of information in there. So using the search function in your browser would help to isolate certain of those FAQs.
Okay. Okay, so where am I here now? All right, next question from Ronald is, for period 5 application, the 10% is no longer available. Why we still have the question there? Does that make sense to you, that question?
It kind of does, but so I'm not quite sure. All I know is that in the calculation, it must be taken off, and it's important to remember in this calculator as well that it applies for all periods. So if you choose, so for periods 1 through 4, definitely the temporary wage subsidy was in place and would need to be deducted. So it might appear to be redundant, but it is necessary for some of the periods, and the calculator does apply to, right now it's for periods 1 to 5, and it will apply for all periods 1 through 9.
Okay.
So what, but if obviously if it doesn't apply, just enter nil in the amount in the field.
Okay.
Randy, it's Karen. I'll just chime in to say that you're correct, and the 0 does need to be added in. It's because the application is built off of periods 1 through 4, and people looked at whether or not it would be more confusing to remove it or leave it in. But from a build perspective for the application, it's much easier to leave it there and ask people to put in a 0, so it's clearly identified in a number of spots to simply for periods 5 forward, enter a 0.
I'm not sure. It's a good question. Maybe, and I'm not sure if Lorraine is on the line or not. Maybe we could enter a little text box on the calculator so people don't get confused by it. I'm not sure if it's already there or something we could enter.
Yeah, that might be a good idea, just to about, to confirm what's going on. Yeah. Great, thank you. Lorraine, did you have anything to add on that? I don't know. I know that you called her out, but I don't want to.
Just to say that we had tried to provide some language to explain that, but it's obviously still not clear. So we'll take a look at that and make sure that we clarify that for users.
Perfect. Thank you. So there you go, Ronald. Ryan is asking, is the CEWS not going until the end of December?
So currently what the legislation provides for is periods 1 through 9. That is up to the end of November the 21st, 2020. It also provides the option for a CEWS period to be set by regulation ending no later than December the 31st, 2020. But the government has yet to set any amount for, let's call it a 10th period. So it remains to be seen. While the signal is out there that it's on the table as to how it will look and when the government will announce it remains to be seen.
Okay. Yes, so I just wanted I was aware of that as well, but I think it's important for people to know because it is a sort of a glaring omission so far, but hopefully we'll have more news in the months to come. All right, Tim is asking, how does the new calculation work with employees paid monthly?
So this is a question we get frequently. We got it in the earlier round of consultations that applied to periods 1 to 4 as well. So it's important to remember that remuneration for purposes of the CEWS is on the basis of a 4-week period. So where the pay periods don't align specifically with the claim period, it would be necessary for the employer to adjust the amounts before entering them.
Okay. Very good, thank you. Next question from Kevin is there a deadline of when I can apply for the various periods?
So an application for CEWS, whether it's periods 1 through 9, has to be made no later than January 31st, 2021.
Yeah, so it doesn't matter for what period. So you can apply for March by January 1st, 2021, right? Just
correct.
Okay, very good. Next question from Catherine is, can you explain pre-crisis pay?
Yeah, could be a long explanation, but generally with the CEWS, an employee who wasn't on the payroll prior to the start of COVID, so never had a baseline remuneration period, the amount of the subsidy could be restricted, and it's particularly important for non-arm's length employees. So if you go to our frequently asked questions starting at question 18, it explains in detail what pre-crisis pay, or the technical term is baseline remuneration, means. And basically it means, as I noted before, the average weekly eligible remuneration paid to an eligible employee by an eligible employer during a period that begins on January the 1st, 2020 and ends on March the 1st, 2020. And it excludes any period of 7 or more consecutive days for which the employee was not remunerated. So that is the basic baseline remuneration or pre-crisis pay. Then it provides for a number of elections depending on which period you are in. I believe I referred to those earlier, so I won't go through them again. So then if you look at table 4 in that question, it also goes through the life cycle from periods 1 through 9 of how an employer would calculate pre-crisis pay, or the technical term baseline remuneration.
Okay. Okay, we'll do a few more questions. We have about 3 or 4 minutes left, but there's so many questions. We're going to still try to get to about 3 or 4 more if we can. Diana is asking, can you apply for employees who worked throughout the pandemic or only rehired employees?
So both. So you can retroactively hire employees that may have been laid off as well.
Okay.
But as I noted, baseline remuneration is key.
Yeah, fair enough. Okay. So there you go, Diana. Next question is from Lisa. If you select leave with pay, and I think this goes to Lorraine, what you went through on the online calculator. If you select a leave with pay, the amount is larger than the other amount. Why is this? And have we missed something in previous periods? And this came up a few times, this style of question, I think when you did the run through. Can you explain that?
Yeah, they haven't missed anything. It's just the legislation provides for a different calculation for periods 5 through 9 for employees who are active versus on leave with pay. So it can give a different result if the employee is on leave with pay.
Okay. All right. Steve was asking, he says, his accountant mentioned that if my biweekly pay doesn't line up with the calculator, I can keep my dates as long as I am consistent. I want to verify if that was okay. What's your take on that?
Yeah, this goes to the heart of the question I answered just moments ago.
Okay.
The legislation doesn't provide for pay periods that are outside of that 4-week pay within a claim period. So there will have to be adjustments. The technical result is there will have to be adjustments.
Okay.
And now, having said that, it remains to be seen whether or not it would have a material impact on the calculation, and what the CRA would do, if anything, if it came down to an audit. It's an entirely different matter. So, consistency is important, obviously. Materiality will be important, but we can't, tell someone not to calculate it properly within the way the law defines the amount.
Okay. All right, I'm going to squeeze in 2 more, and then we're going to have to probably shut this down. But Jeff is asking, if I accidentally did not mark off one of the election boxes when submitting, should I be submitting as a correction? It tried to do so, but it would not allow me to refile if I was not changing my numbers.
I'm going to defer to Karen on that one.
Right now, if you'd like to, if you honestly made a mistake on the election, please call the business inquiries line, and they will make a note on your file. And right now it is not possible to make an amendment on an election, but we're looking into whether or not we should or can do that in the future. So the answer now is to call business inquiries, and they'll note that on the file for you.
Great, thank you, Karen. And I think the last question we'll add here is from Fiona, who wants to confirm that the wages are when earned, not when paid. Correct?
That is correct. For eligible remuneration within a claim period, it's an amounts that are paid in respect of the period. In other words, earned. Now, for baseline remuneration, however, when you calculate baseline remuneration, it's amounts paid in the period.
Very good. I hope that you got that difference, Fiona. All right. Okay. I'm so sorry that we couldn't get to more of your questions. We're even just a little over time, but we will certainly be going through all your questions and trying to get back to you if we can. Otherwise, if we're not able to, please call us or call CRA directly. We are both updating our FAQs based on these types of responses. Before I close off, though, I want to invite folks, anybody from the CRA team that may want to say a couple of final words. Randy, maybe being the one that you answered most of the questions before we go.
Sure. I'm not sure if Matthew wants to say anything on behalf of the minister to close it out, but
Sure.
From my perspective, keep checking the FAQs and the information we have online, because as we do these stakeholder sessions and get more information, there will be updates to the information. And thank you again for the opportunity on behalf of all my colleagues to provide you with additional information on the CEWS.
Great, thank you, Randy. Matthew, any final words from yourself and the minister's office?
Just a big thank you to everyone who's been on the call, and particularly I forgot to thank the officials who have been doing such a great job in these calls and answering so many technical questions and doing all sorts of work to administer the program. So thank you so much again, and thank you to the CFIB and to everybody who's joined us on the call today.
Great, thank you, Matthew. Again, my thanks to all of you at CRA. I really appreciate you taking the time. Randy, Lorraine, Karen, Harry, and Matthew. We really do appreciate it. And hopefully we, again, apologize we couldn't get to more questions, but please feel free to give us a call. We'll be happy to try and help you wander your way through this. Just a reminder, the applications are opening on Monday for period 5. I'm correct in saying that, I hope, at CRA. Getting into the calculator and learning how to do it is a good idea before that happens. So thank you again, everybody. And with that, I will webinar.